Credit cards can either be your best financial tool or your worst financial enemy. The difference comes down to how you use them. Most people learn how to swipe a card before they learn how the system actually works. They know how to buy things, but they don't understand interest, utilization, credit scores, statement dates, or billing cycles. And because of that, millions of people fall into debt traps, pay unnecessary interest, damage their credit score, and lose thousands of dollars every year without even noticing it. But credit cards don't have to be dangerous. In fact, when used correctly, they can protect your money, build your credit history, give you cash back, provide travel rewards, and help you access better loans in the future. The problem isn't the credit card itself. The problem is that nobody teaches you the rules. So in this video, we're breaking down the real secrets to using credit cards the right way. These are the simple habits that financially smart people use every single day, even if they only have basic credit cards. Let's start with the biggest secret. Always pay your balance in full. This might sound like obvious advice, but most people don't understand why it matters so much. When you pay your statement balance completely before the due date, you avoid interest, avoid fees, and avoid falling into debt. Interest on credit cards is insanely high, often 20, 25, or even 30%. That kind of interest grows faster than most people can pay it down. But here's the good news. When you pay the balance in full, the interest rate becomes meaningless. It doesn't matter if your card has a 29% APR because you'll never pay a single dollar in interest. Paying in full is the #1 rule, and if you follow it consistently, you already win half the battle. The second secret is keeping your credit utilization low. Credit utilization is the percentage of your credit limit that you actually use. If you have a $1,000 limit and you spend $300, that's 30% utilization. And here's the part most people don't know. High utilization can drop your credit score even if you always pay on time. The sweet spot is keeping your utilization under 10% or at least under 30%. Credit scoring models see low utilization as responsible behavior, and it helps increase your score over time. So maybe you earn enough to spend more, but your score will thank you for staying low. Another credit card secret most people don't understand is the difference between the statement date and the due date. The due date is when you must pay your bill, but the statement date is the day your utilization gets reported to credit bureaus. So if your utilization is high on the statement date, your credit score will drop, even if you pay it off the next day. Smart users pay their balance right before the statement date to keep their reported utilization low. This small trick can increase your score much faster. Let's move on to rewards, because this is where credit cards can actually make you money. Cashback, points, and miles are real benefits, but they are only helpful if you're disciplined. People who chase rewards but spend more than they normally would end up losing money, not making it. The secret is simple. Only use rewards on purchases you already plan to make. If you normally spend $200 on groceries, paying with a cashback card gives you free money. But if you spend $300 because you're thinking about points, then the credit card company wins and you lose. Rewards work best when you treat them as bonuses, not motivations. Here's another powerful secret. Don't close your oldest credit card. Your length of credit history is one of the biggest components of your credit score. When you close your oldest card, you shorten your credit history, which can lower your score. Even if you don't use your old card anymore, keep it open, unless it has a high annual fee. Charge something small once every few months, like a Spotify payment or a cup of coffee, and then pay it off. Keeping your oldest accounts open helps you build a stronger credit profile. Another essential secret is understanding minimum payments. The minimum payment exists to help the bank, not you. It allows you to stay in debt longer while paying huge interest. If you only pay the minimum, the bank makes enormous profits from your interest over time. Never fall into the minimum payment trap. It seems harmless, but it creates long-term debt that is very hard to escape. Let's talk about safety, another area where credit cards actually protect you more than debit cards. When you use a debit card and someone steals your information, that money is taken directly out of your bank account. It can take days or weeks to get it back. But with credit cards, the money isn't yours in the first place, and fraud protection is built in. Most credit cards offer zero liability protection, meaning you're not responsible for unauthorized charges. So using credit cards online is often safer than using your bank debit card. This is one of the reasons why financially smart people prefer using credit cards for most purchases while keeping their debit card for cash withdrawals only.
Another secret is making multiple small payments throughout the month. You don't have to wait until the due date. Paying a couple of times per month helps you keep utilization low and prevents large surprise bills. It also makes budgeting easier because you stay aware of your spending in real time instead of at the end of the month. Let's talk about credit card limits. When you get a credit limit increase, it's not an invitation to spend more. It's an opportunity to lower your utilization and strengthen your credit score. Higher limits mean more breathing room. Many people refuse limit increases because they're afraid they'll be tempted to overspend. But if you have discipline, a higher limit is actually a financial advantage. You can request limit increases once or twice a year, especially if you've never missed a payment. Another powerful secret is choosing the right card for your lifestyle. Not all credit cards are the same. Some are great for travelers, some for groceries, some for beginners, and some for building credit. The biggest mistake is applying randomly for cards without understanding their purpose. You don't need 20 cards, but having 2 or 3 well-chosen ones can greatly improve your benefits and flexibility. If you drive a lot, choose a card with gas rewards. If you shop online, look for cash back at online retailers. If you're new to credit, start with a simple no annual fee card and build from there. Here's another important habit: avoid cash advances. A cash advance is when you use your credit card to withdraw cash from an ATM. It feels easy, but the costs are insane. Cash advances come with immediate interest, higher fees, and no grace period. It's basically the worst feature of a credit card, and you should stay far away from it. Let's discuss another advanced secret: knowing when to use 0% APR promotions. Some credit cards offer 0% APR for a limited time, usually for purchases or balance transfers. If you use these offers strategically, you can pay off a large expense slowly without interest. But if you're not disciplined, the balance will hit you hard once the promotional period ends. Use this feature only when you have a clear repayment plan. Another secret many people ignore is credit card notifications. Turning on alerts for spending, due dates, and large transactions helps you avoid late payments and fraud. It's a simple trick that saves money, prevents missed payments, and protects your account. With alerts, you always know what's happening with your card. Now let's talk about another core habit: never applying for too many cards in a short time. Every time you apply for a credit card, the bank performs a hard inquiry on your credit file, which can temporarily lower your score. Applying for multiple cards back to back can hurt your score and make you seem risky to lenders. Spread out your applications and research your options before applying. Here's another big secret: credit cards can help you build a strong financial identity when used correctly. Banks, landlords, car lenders, and even phone companies look at your credit history to judge how responsible you are. Using credit cards wisely builds a positive profile that opens more opportunities in the future. This is why building credit early is so important. Another mistake people make is thinking that credit cards are only for emergencies. Using a credit card only in emergencies won't build credit effectively. You need to use your card regularly, but responsibly. Small monthly charges paid in full will do more for your credit score than rare emergency purchases. The final secret is simple: credit cards are financial tools, not emotional triggers. When you treat them with logic instead of emotion, they become extremely powerful. When you use them carelessly, they become dangerous. The goal isn't to fear credit cards or to worship them. The goal is to understand them. When you follow these habits consistently, you avoid debt, build credit, earn rewards, and protect your financial future. These small decisions you make today can shape your financial life for the next 10 or 20 years.